All right, y'all, back to work. Boy, pretty darn good day today. Hope you guys made some money out there as well. Boy, markets were wild today. First day the tariffs took effect. And I'll tell you, when markets get wild like this, I know it can be scary, right? Big move down, big move up, big move back down. I know this stuff can be scary for a new trader. But situations like these, they tell us that in most cases, there's a very specific strategy setting up for the following day. So I want to cover that strategy that deals with these big wild swings, that way you have a game plan to make some money on Wednesday as well. So enough of the intro. Charts are ready. Let's roll our sleeves up, go find some more winning trades, make some more moolah on what should be another fantastic day tomorrow in our trade room. I got the S&P SPY all ready to go. NASDAQ triple Qs are all ready. I have three very important clues on the charts tonight that are telling us where I think the winning trades are waiting for tomorrow. One of those clues is right here on these hourly time frames. I like to use the 60-minute time frame as an overall directional filter. And one big clue right now is we're very bearish right now on the S&P SPY, bearish here on the NASDAQ and the triple Qs. That's one of three clues I have for tomorrow. The second clue is on some faster time frames, some tick charts. We're going to grab that in a moment. Before we do that though, let's check schedule for tomorrow because we have a pretty busy day tomorrow. There are three things on my mind for Wednesday. The first thing on my mind is actually tonight. Tonight we hear from President Trump addressing Congress at 9 p.m. Eastern time. That will definitely be a wild card. I'll have my popcorn ready tonight as he talks about tariffs. He talks about Doge. He talks about all the stuff we've been talking about on Twitter the last couple of weeks here. So one thing tonight, keep your eyes on the television. Tomorrow we got the ISM services number tomorrow morning. That's our biggest number of the day tomorrow. Remember, anytime we have news at 10 o'clock Eastern time, you better be paying attention. And of course, we continue to listen in to tariff talk out of Trump, out of the White House. Those have kept us on our toes the last couple of weeks here, and we'll continue to keep an eye on those tomorrow morning in our trade room. So Trump tonight, 9 p.m. Eastern time is a wild card. Tomorrow, ISM services. Let's get back to our charts though, because it's good to know when the news is, but the money is made on the chart. I mentioned earlier, one big clue is this bearish hourly time frame. That's our directional filter. But two even more important clues right now are over on the tick charts. Now, tick charts are based on volume. They make pattern recognition a hell of a lot easier. That is an 8,000 tick chart, kicked up a little bit higher because of all the volatility we've seen the last couple days. And that moving average right there, in case you're watching for the first time, that is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades in our daily trade room. There's two big clues here on the charts right now. One big clue, and I mentioned this earlier in the intro, big move down, big move up, big move down, big move up. Now, in my trade room, we always say, whenever we see big moves back and forth like that, that usually means there's a range coming somewhere right in the middle of this chart right now. You could probably also argue, we talk about this a lot in these videos, we had a range right there, a range right there. Whenever we have these stacked ranges like this, markets love to rotate and fill in that gap in between. That's a second clue for tomorrow and one of the most important clues we have. Third clue though is what I call unfinished business. Unfinished business. If you watch these videos a lot, you know that. For example, like this afternoon, anytime we see a range and we see a breakout, we almost always get a breakout pullback. Anytime we see a range and we see a breakout, we almost always get, even sometimes they're wildly crazy, we almost always get a breakout pullback. So what that means is I see you up there, 5,900, 5,910 here. There was a range up there, right? From what? Earlier on in the week, late last week, we had that range up there. This thing is unfinished business and begging for a breakout pullback right now. So keep that number on your radar. So let's put all these clues together. We're bearish overall on the hourly. We're expecting there to be a range brewing here right in the middle and unfinished business up overhead. Knowing this much right now, my goal will be to run up, sell bull traps, run down, buy bear traps traps, run up, sell bull traps, right? Run down, buy bear traps. Now, let's break this down so you know how to time the best entry. As we go higher on this, remember, I can't pick a top up there. A lot of volatility right now. This is a horrible spot to be buying. I know it seems very bullish right now, but don't forget the big range. Don't forget the 60-minute time frame. So I'm sure a lot of rookies are going to chase this thing. And if they do, I'm going to use what we call the 2-try rule. It's basically a bull trap. I'm going to wait for price to pull back. Let the buyers try once. Go lower. Always a lower low. Let those buyers now try twice. Now, once those buyers try twice, now I know where your stops are. If you're caught long and you get stopped out of a long position, you sell your way out. It's a very simple way to trap in those bulls. Use their stops to fuel that move back down again. Now remember, this is where a winning trade turns into a nice big winning trade. We add to our winners. We know the market now wants to rotate. I'll be looking for this pattern. First of all, lower low in price, and that high in between will barely miss that 21 EMA. In our trade room, we call that separation. Separation equals strength. As we rotate lower, separation off that moving average, lower low in price. I want to get right above that high. This is another version of a bull trap. In our video classes, we call this bull traps and add-ons. Bull traps off the top and add-ons as we go lower. Now, once we go back to these lows, is this a good place to sell? No, right? It's a horrible spot to be a seller. We're anticipating this rotation back higher again. And of course, it could be here, anywhere in this area. We're anticipating that rotation back higher again. So do I blindly buy down here? Of course not. We wait for price to pull back. We use the same pattern, but flip it now on its head. As it pulls back, it's bears once. It's higher high, it's bears twice. Now remember, higher high because sellers want to sell high. I need to rope in those sellers because I need to use their stops above that high to squeeze those stops running higher. This would be a bear trap. 1 try, 2 try, use the 2-try rule. And then again, if you want to make more money, add to your winners. One of the best parts about ranges is that we know where this thing wants to go. So as it starts popping higher, watch for that separation, right? Look over here, right? Great example right there. That shallow pullback right there, right? It's a higher high in price. I want to be buying right below that low. Again, get that separation, and that's your cue. Bear trap and add-on. We go up, bull trap, and add-on the way back lower here. Now, I have a couple variations I want to talk about. I mentioned earlier, we want to go up and trap these buyers in and run back down again. You know, I would love to say we always get that bull trap up there, but we don't always get it. Sometimes the market will run up, and like today, right, there'll be so many bears up there, it'll just get whacked right back down again. These can be tough on the emotions. If it really gets crushed back down again, it will almost always begin to grind going lower. Now again, we know what's happening right now. It's trying to flesh out one big trading range here on the tick charts. When this happens, all we do is we don't chase after it. We mark a trend line off the low. We find that channel off the high. And just like that add-on trade I keep mentioning before, right? If I can get some separation on this and I can get above one of these prior swings, this is where the money is made in situations like this. These V-top reversals off the high. Now, I do want to talk about a couple more variations of this, but let's slow down for a second because I know that most folks watching right now, you know these patterns already. You're making money with traps and add-ons already. But if you're watching for the first time right now, this might be a brand new strategy. Don't you worry. I teach this entire system. In fact, I have a ton of examples, trade examples of bull traps, bear traps, add-on trades. Guys, I want to help you time better entries, make a lot more consistent money. What I'll do is I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there. and take that free trading course, because the strategy I teach in that video course will teach you a stupidly simple trick we use in our members trade room that literally tells us exactly where the winning trades are waiting for each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there and watch that free trading course. Everyone loves the trade examples I share in that short video series. The best part is it is 110% free for you. And also too, keep in mind too, guys, I'm going to put all the links you need to learn the roadmap, time better entries. I'll put all that stuff for you in the description of the YouTube video. Start there first. Most folks, believe it or not, they start making money all on their own, all from that free video class linked in the description of the YouTube video. And also too, if you're on Twitter or X, I post a ton of charts and videos and mindset stuff during the day on Twitter X. If you're on Twitter X, give me a follow. Again, all the links you'll need to learn more and hopefully earn a lot more are linked up for the description of the YouTube video. Okay, where did we leave off here? I want to make sure you guys know, if you're watching for the first time right now, where to learn the entire roadmap and see more trade examples. Okay, so we run up, we get whacked back down, we find that V top reversal off the high. Remember, you want that first test, right? That first test is the best test off that channel high. We run down, right? If it V bottoms off of that low, same idea, right? We pop up, we find that new channel going higher, we mark that trend off the highs, we mark that trend line now off the lows. And again, remember, in these situations, you want to get in below a prior swing. It's just like the add-on trades, right? You want to get in above prior swings here, get below prior swings there, and keep on trading that rotation. Now, in a moment on the NASDAQ, I want to talk about a breakout going lower, because we're a bear market and we could easily see some more fireworks tomorrow regarding tariff talk. I want to talk about a breakout going lower, because there's 2 types of breakouts I trust in these wild situations. We'll talk about those 2 here in just a moment. First though, we know the market now is going to try to rotate back up here. What if we ran higher into a new trading range up here? We're seeing a lot of ranges right now. Let's get a game plan that. What if we went higher here into a trading range? This is going to feel very bullish, but we're not a bull market, at least not yet. On the hourly, we're still a bear market. What do we know about ranges? They love to rotate, right? They love to rotate back and forth. The amount below, the amount above, right? The amount above, the amount below. We like to use triangles. We teach this stuff, by the way, inside the free video classes, right? So if we were to pop higher and run into a trading range up here, knowing that we are an overall bear market, my favorite trade for this would be basically a fake out breakout. As we go lower, I'm going to look for that fake out breakout off that low, snap higher. And these are always kind of fun because the amount below the range can project now back above the range. This will feel very bullish, but again, don't lose sight of that hourly time frame. We would need to really convincingly break that pendulum swing to call this a successful bull breakout. What my goal will be is as this thing starts to run higher here, I'm going to look for ways to get a bull trap up here, right? Trap those buyers once, trap them twice, use that 2-try rule, sell into those stops. And again, as it rolls lower, remember, keep adding to that winner. Don't just kick your feet up on the desk and bask in the big green numbers, right? Take some of those contracts off as targets, allocate them back in again, right, to keep building that position as it rolls. Remember, it's always a bull trap and an add-on over and over and over again. We use the same entry setups, but we use them in different ways depending on if it's a range or a trend. You'll learn that in that free video class. And again, the amount above, right, the amount below. That will give you an idea of where that final target is going to be. Now, a lot of times what happens is we'll run up into a bull range like this. We'll get that pop up. We'll get that bull trap up there, and this thing will just get crushed and run back down again. What do you do in that situation? You use a breakout pullback, right? You use a breakout pullback. So what do ranges do? They love to break out pullback. So now what was support becomes resistance. When I think about a breakout pullback, I always think about a two-legged pullback. Like over here, right? Goes up. A two-legged pullback. When I think breakout pullbacks, I always think two-legged pullbacks, right? So two-legged pullbacks back into the area. Same thing again. Bull trap, right? Bull trap, add-on entry, going lower. Again, same thing over and over again. And again, we know where the market wants to go. It wants to take out that low. It wants to make this one big trading range into the rest of the week this week. So if we play our cards right tomorrow, we might get a nice bull trap of a range up there, a breakout pullback off the underbelly of that range, a chance to add to our winners as we try to make our way back to the other side of that trading range. Some ideas I'm tracking for tomorrow in our trade room. Now, let's kick this up a couple more notches. What if we make a run going lower? We talked about how to buy this thing back up again, but how do we know and how do we trade a breakout going lower here? Over on the NASDAQ right now. NASDAQ, it's pretty easy to see right now. We're very bearish here on the hourly chart. The tick charts though, there's a couple really great examples of that unfinished business on the tick charts. But before we dive into the tick charts though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, will ya? And make sure you subscribe because YouTube rewards me every time you like, share, and subscribe to our channel. I know we're all busy people these days. I appreciate you spending a few minutes with me here every evening on these video lessons. So thank you for the likes, subscribes, and all the ongoing support. Now, I promise I'm done begging for likes and subs. Let's now roll our sleeves up here and go into the NASDAQ tick charts here. Over on the tick charts, look at the volatility right here on the NASDAQ. The NASDAQ's always a wild animal. This one even wilder for today. The big clue right now, though, is, again, anytime we see big move down, big move up, big move down, big move back up, there probably is a range. There probably is a range there in the middle. And are you seeing these unfinished business? Are you seeing these right now? Look at that range down there, right? That area right there, that 20, what's that, 263, 223, right? It's just, that's begging for a bear trap right there. If you understand, again, if you understand the way these types of situations work, right? Big move, big move, big move. There's a range in there. If you understand how ranges work, right? Ranges love to rotate. Hopefully by now you know that about me. I love range markets because that rotation is so predictable. It's so consistent, right? So that is a breakout pullback area. And then I see you up there. I see you up there right around that prior week close, right? We get that range up there. We get that big breakdown. I'll tell you, that breakout pullback, I don't think they got it. I don't think they got the breakout pullback. That breakout pullback is still unfinished business, if you ask my opinion. And then we'll go right along with, right, finish off the business up there, finish off the business down there, right? Markets love to just run stops back and forth in these types of situations. So we mentioned earlier, we talked about running up, bull traps back down, bear traps back and forth. I want to talk about breakouts, right? There are two types of breakouts I trust in these scenarios. Before we talk about those breakouts, I always want to remind you too about double tops and double bottoms. A lot of people forget these entries. You know, for example, we oftentimes will see a run up. We'll get a nice, easy bull trap off that high, and this thing will just collapse back into that range. But for whatever reason, with all this momentum going higher, we see another leg going higher. When I was a new trader, this would always kind of freak me out, right? Because it wasn't doing what I thought it should do. This is where you have to remember that 60-minute time frame, right? Anybody who buys down here will be taking their profit targets up here. Buyers down here become sellers up here. There are probably a lot more sellers waiting up at this high. These double tops, we call them retest trades in our trade room. When they go back and retest those areas now remember, this is a horrible spot to be buying. You would never want to buy up there. Remember, we're not a bull market overall. It's a bear market overall on the hourly. So if these buyers come in and we foolishly try once, try twice, remember double tops in a bear market like this are a gift from the trading gods. We can wrap those bulls in. And again, it's all about that bull trap. It's all about that add-on, right? That bull trap and that add-on. My goal on these, by the way, is to always get that add-on entry, bull trap, right? Add-on. I want to get the add-on ideally before we take out that low in between. Right? Because that's a big support level there as we go. So target off here, right? Target off here, and we look for that run back up again. Again, double tops in an overall bear market. Now, also too, with such a big move down the last few days, I'm open to that as well, going lower here. We may run lower. We may get those bears trapped in once, twice, right? Squeeze those bears back up. But again, it's a bear market, right? We may end up rolling back down again. Now, keep in mind, right? In these trades, and we talk about this a lot in our free video classes, in these trades here, I'm going to get a one-to-one target. I'm going to move that stop up to my point of entry. You'll learn this, by the way, inside that free video course. I can't teach everything in these YouTube videos, unfortunately, so make sure you grab the free video class to learn to time better entries, manage those positions better. Again, most folks start making money all from that free video class. People love it. So it's not this is not a losing trade. It's a winning trade, right? It doesn't go as far as I want, but it rolls back over and takes out that low. Now, again, once we take out that low, anybody who's sold up here, they become buyers down here, right? So again, this is the last place you want to be selling. So if I can get the bears coming in and trap those bears in once, twice. Now remember, on these double bottoms now, I can be a little bit more aggressive on these entries because now we know where that low is. Right? We now know that bears up here become buyers down here. One try, two try, always going to be that higher high. Remember, because sellers want to sell high, run those stops. And as we start running stops here now, remember, get that separation off that moving average. I can't emphasize enough how important that separation is because it signals strength. Separation, higher high in price, right below that low, keep trading that rotation back and forth. So I just want to make sure I mention that double tops, double bottoms in a range market like this, very, very effective. In fact, they're oftentimes some of our biggest winners we see in our trade room. Now, let's finally talk about breakouts, right? Breakouts. Now, hopefully by now you know kind of what I'm going to talk about here on the breakouts. If we start seeing ranges brewing here in the middle here tomorrow, that range now, one way to trade breakouts is a breakout pullback, right? A breakout pullback. And again, look at these charts right now, and you can see that breakout pullbacks, they love, right? They love to come back, right? And just tap those breakout pullback zones. So they're very, very common. If I can get a strong run down, the key will be a very strong and convincing breakout going lower. What would that definition be? How would I know we have a strong breakout? It would separate, right? As it runs lower, it will separate off that moving average. This is why I use the 21 and only the 21. If you put too many indicators on here, there'll be too many voices in your head. So separation, what I now want to do is now look left, find that prior swing, from that range, and again, think about a two-legged pullback. When I think about a breakout pullback, I always think about a two-legged pullback. Now, this could easily keep on rolling, right? It easily could. If it did, I would start looking for add-ons, right? If it did start rolling higher here, I would look for add-ons at that point, right? Like I always do as it rotates back and forth. But there's a good chance, though, that as this thing goes higher here right now, all of that strength going lower is going to want to retest that low. I'll look for that same bull trap, 1 and 2, trap those buyers in, and you know it, right? They want to take out that low now. As we make our way down to that low, it's always going to be that trap add-on, that lower low in price, and that's, again, that move above that high. Targets off at that low, and at that point, possibly a double bottom retest trade off of that low. We'll cross that bridge tomorrow once we get there. A final type of breakout pattern is one of our favorites. It's a pop and grind breakout. So for example, we may roll lower here and begin to grind and grind and grind. Again, this might come in the wake of some more tariff talk tomorrow morning. If we pop and begin grinding down, remember, grinding markets are very strong trends. All we do is mark that low, we pin up around these big highs, we look left, find some of these prior swings. My goal is I want to find a prior swing that lines up right around the top of that channel. This is the first test, is the best test, as we say in our trade room. It's the first touch of that new channel. And when you combine that above a prior swing, right? Tough to beat those winning trades here. And again, as it grinds down, we get back above that moving average. 1, 2, trap those bulls in, run those stops for a run back down again. One cool thing about these pop and grinds too is the size of the pop leg. Remember, anytime we see a range breakout, the breakout leg can be used as a measuring leg. In these kind of pop and grind scenarios, and we saw one of these last Friday morning, right? We saw, well, actually technically Thursday night into Friday the following day. Anytime we see a pop leg like that, I can anchor that now, and that now tells me that symmetrical measured move is an easy way to find the final target. A lot of examples of those inside the free video course. So a couple breakout patterns for us, a bunch of failed breakout patterns as we flesh out that range in between. Will we get some unfinished business levels taken out for tomorrow? Only time will tell, but that is the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these great markets is to learn and trade along every morning at the opening bell. Again, I'm going to put all the important links you'll need to learn the strategy, time better entries, manage better positions, make a lot more money. Again, start first, of course, with the free video classes. Enjoy all those trade examples. Start making money on your own. Then come join me in my trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.